Friday, June 16th, market analysis, Dan Ehrlich. I always start out with the indexes and the S&P 500 in particular. We are still overbought and substantially so. Yesterday, and I'll do it again today, I'll show you that the RSI, which is my favorite oscillator, is extremely high on a historical basis. And this subgraph, I'll expand for most of the screen. When it gets to these levels, which is the mid to high 80s or higher, it almost always tops out. It may take a day or two, and it has, but I certainly wouldn't be going long at these levels, and I'm looking for sell signals. Any indication that this is about to start a significant correction, and it looks like probably about 20, 22, 3 points to come down and close a gap, is going to start very soon, in my opinion. Maybe today. So, the price action. We started on October 13th, the bull market, with a bullish engulfing ER buy signal and what looked like at the time, as time passed, a head and shoulder bottom formation. The Qs worked out fantastic, no problems. The S&P spider had some problems with the formation. Nevertheless, it seems to have corrected itself and well on its way up. Remember, we have new highs for over a year in the last week or two. And they are staying there, and they made more progress, typical of a bull market. In my opinion, no ifs, ands, or buts about that. But bull markets run into problems. They have tiny, medium-sized sometimes, bearish corrections, typically to come back, either a Fibonacci number or close a gap, which in this case is relevant to support areas, in this case, which is relevant. And those are the reasons in particular, gap closure and support areas, that I think we're going to be coming back down very, very soon to probably 431 or 2, the beginning of some significant support, maybe even 30, 430. But there's a gap to close at 22 and fraction. Call it 23. And that gap occurred when it gapped up on June 2nd. And that's my downside objective at the moment. Now, that is approximately 10 points lower. Yeah, 22 from 42. So that's about right. Maybe just a second, 20 points, maybe 19, but right in the ballpark. And it should start very, very soon. This is Friday. Oftentimes we see profit taking. So far, the spider is down 40 cents on the day, which is very little. Let's go look at the 1-minute chart, and then we'll compare it with the DIA, the Qs, and the Russell 2000. So the 1-minute chart has now come back nicely to a little resistance, and that's basically just today's price action, and stopped at the right spot and maybe turning down. But that's nowhere near enough evidence, in my opinion, that we have started the bearish correction. I think getting below what has been the low today so far, about 440, would be the beginning of enough evidence to expect more downside correction in this bull market. There's no way that I'm turning bearish intermediate to long term. I only think that I only expect, very much expect, that we'll have a correction that'll last several days, maybe a week to 2 weeks at the most. And like I just said, approximately 20 points to the downside, and then back up again to new highs and continue the bull market through the year. Remember June, and we're in the middle of it now. So we've got the rest of this month, July and August, 2.5 months of probable good bullish price action. But when you're getting into September, remember there's the October lows, like last year was in an incredible example. It has a very high historical reliability, in the ballpark of 90% in the last 30 years. We've seen some significant buying opportunity in October. Sometimes it's not that big a deal, but last year, wow, it's one of the best I've seen in decades. Just a hugely profound reversal. So another couple of 2.5 months maybe of strength after this correction has finished. And I say it that way because I'm pretty confident that we're about to have that correction. Let's look at the DIA real quick. The DIA did make it above yesterday's high. The spider did not. It came close, but it was still today a little bit lower than yesterday's high at today's high. Now, the DIA did make it a slight bit higher, and it's very close to an important top on December 1st. Resistance. So even a little bit higher, around 348, is an incredibly important high, the highest high for well over a year. In fact, we're looking at the highest high. It's just a little bit higher since April of 22, 14 months or so. Now, there's a head and shoulder bottom, apparently, in the DIA that is formed at a very unusual location. Normally head and shoulder bottoms, and this is the first shoulder low, December and March for the head of the formation. I've got these arch marks, real fat ones, and May, the end of May. So we broke out of the head and shoulder bottom. There's this big fat dashed line here that I put in as an almost flat neckline, which is normal, but you don't see them pretty flat like this that often. Usually they're a little bit downward slanted for head and shoulder bottom formations. And nevertheless, this looks good, very good. We broke out to the upside a couple of days ago, slipped back slightly for one single day, and boom, yesterday we broke through the neckline decisively, substantially, and closed on a strong note, making new highs for quite a while. But there are resistance levels above, which is not unusual. And after a breakout from head and shoulder patterns, you oftentimes come back and test the neckline. So a minor dip, and I think it's going to be more serious than that, back to 342 is fully expected. We almost got there today. So here's the problem. I think we're probably going to dip back down, way back down to 332 to close a gap. Again, there's a gap in the DIA like the S&P. Gaps are almost always closed. We'll see what happens over time with that gap for the spider and the DIA. So I'm bullish, very bullish. But we're going to have to figure out how to handle this neckline test if it fails and then comes back again. Next, QQQ has been the strongest, the fastest, the quickest since October 13th. Straight up, well, not straight up, but up the fastest, the quickest, the best. We have now made today new highs since January of 22 when the bear market essentially started. For the QQQ, the actual high was November 22 of 21, which was a bearish Ehrlich reversal. ER signal, a bearish one, right smack on top of a long-term bull market and the beginning of a long-term bear market. Great. So October 13th, again, bullish engulfing, fantastic buy signal at the bottom. These signals occur at major, hugely important turning points in the market, as well as intermediate and short term. Now, I don't want to give you the impression they always work. I do want to tell you that we always have a protective stop, commonly called a stop loss, in place immediately upon getting into a trade. So sometimes they are hugely profitable, and sometimes you take a little loss. You know how much you're risking. You know how much you're risking in advance, period. Now, we failed to stay in new high ground since January of 22 this morning, and we are currently almost exactly unchanged, up, what, 11 lousy little tiny ticks, nothing to speak of. If we start slipping, again, today is Friday, profit-taking potential, and we managed to get all the way down below yesterday's lows, that's kind of a stretch in my opinion at the moment, we could see, will see major red bearish engulfing signals occur. That is my key. That is my trigger to scream bloody murder. We're going south. And how far down on the Qs? 333. There's a gap to close in that area. Major support in that area. But there's other support levels on the way down, which I'll be watching to see if the market can bounce off of those. But my lowest expectation is 333. Again, maybe something in the middle to high 40s or even 50s might stop the decline. Right now we're at 70 and a half, 370.50. So some sort of a dip is about to start, in my opinion, in the indexes. And one more index, the Russell 2000, has, again, many reasons to believe that we are about to start a downside correction. Currently, the Russell is down 1.5 points and has already come very close to yesterday's low. If we start sinking and in the index overall start making new lows for the day, the Russell is likely to have another bearish red ER sell signal like we did 2 days ago that has not been violated. That is a major sell signal that is still okay. Closing below Wednesday's low, which is going to be a new low and a new low close for approximately 7-8 days, is significant. It'll be a minor downside breakout, but much more importantly, the beginning of the proof that the signal is starting to work correctly. How far down can we go? Hey, there's another gap just like the Spider, DIA, and QQQ. And that one for the Russell 2000 is 176.37. So I'm looking for a downside correction in all of these indexes to happen almost immediately. All right, let's look at futures contracts, and we'll get to that in just a second here. So I had to close the door. Now, futures. We got a brand new signal today, and we'll get to that in a few moments. I always start with the E-mini, which is the stock market index, as well as the futures contract, of course. And everything I said about the SPY basically applies here. But remember, there are some nuances with the E-mini because the trading hours are different. The trading hours allowed the E-mini to make a higher high, just like the DIA, the Qs, the Russell, and could be a major buy signal if we start to get below yesterday's low for the ES, S&P E-mini. Overbought, all of them. Prime territory from the standpoint of oscillators and price levels for all of them. It's just not starting yet. You can never make the market do what you want it to do. You always have to move with it. So I need some proof to start to believe that these expectations I'm providing you are really going to kick in, and it's pretty likely. All right, so futures. Whoops, okay, we go here. Now, we're already on the E-mini. Next chart is the bonds. Sideways formation at the moment, about a month in size, a little pennant, if you will, but sitting right on top of a bull trend line. A really good example of how bull trend lines are supposed to stop declines and support levels as it touches the line. So far, we don't have any bullish breakout to the upside, and I want to see it start to move up into the 129, 130 range. If we get up above, and we will in a while, and maybe weeks, and maybe a month or two, above 135, we're going to start a long-term bull trend. I'm bullish on bonds, intermediate to long-term. Short-term, it needs a little help to start to rally, which it hasn't gotten yet. I like the rally yesterday, and the fact that we're an inside trading range today or a doji really doesn't mean too much one way or the other. And the next one is the 10-year notes. Inside trading range, just a little bit above the bull trend line here and a significant support area. So there's a chance it could dip down a little bit more, but I'm expecting it to start to make new highs for week 2 and 3 and 4 real soon. Next is energies, crude oil, rallying a little bit, now back into a resistance area. Long-term trend is down. I have no change of opinion, looking for 65 to be broken on the downside and to perpetuate the long-term downtrend. Looks like it could easily, once it gets below 64.40-ish, drop down to probably 48.15, 48, maybe a little higher, a little lower, but in the high 40s. Next chart is heating oil. Same kind of commentary here, although we did get above a little resistance level just yesterday, and there's a little follow through today. Please notice that we are very, very close to being overbought. So I don't expect this rally to really go much further. And then we're going to start to break down below 2.13 and lower. That'll be a major bearish long-term breakout. Next chart, natural gas is today overbought. It is likely to turn back down again ASAP, probably early next week. It could even happen by the end of the day. Last signal was the sell signal that we got. It worked out very, very nicely for a week and a half or so into oversold conditions and made some very good money. Next signal chart is gold, silver, and platinum, then copper. Gold dropped into new low ground for a while yesterday, but closed on a very firm note, slightly higher on the day and near the high of yesterday's range, plus near the high of the previous day's range. Now today it moved up a little bit more, but currently trading a tiny bit lower on the day, not much. The trend may have turned down. The last buy signal we got worked for a day or two, not much. These green and red bars or candlesticks, although I prefer vertical bar charts. Remember, I started drawing my charts by hand 1971. 52 years in this business. So that's my preference. But it has the same data. It just looks different, candlesticks, than vertical bars. Okay, bearish on gold at the moment, but watch what we have when I show you the other precious metals. The long-term trend is still basically up, but we broke a trend line, a bull trend line, going back to November. And that causes me some concern about the trend. I need to make highs on a closing basis higher than 2003, or we could have a little bit more trouble on the sideways situation and possibly a little bit more of a dip. I'm favoring the upside because look at silver. We not only caught, like gold, the end of February or the beginning of March bottoms. This was March 10th in silver. We caught both of the double top highs, red bearish ER sell signals on both of them. So we caught the two highs on a double top perfectly. The downside breakout occurred a day after another bearish engulfing. The minimum downside objective was measured, and I forecasted in advance, days and days, if not a week or two in advance, and it got there. Plus, we have a bullish engulfing at the bottom of the break and the beginning of a great rally so far. So this is clearly a long-term bull trend that has had a bearish correction and is a little likely to start to take out 24.6 and 7 and start to make higher highs. That level, 24.6.5 or so, was a minor test of resistance, and the dip was probably over yesterday. We're following through to the upside slightly at the moment. I'm looking for higher highs and a push into 25 and through up to at least 26.45 and very well. Let's get there first. Probably higher afterwards. Next is platinum. Yesterday, we have a bullish engulfing. Brand new buy signal I told you about yesterday. Today, we dipped down into approximately the middle of yesterday's range, which is absolutely dead perfect for my strategy technique. The market is currently trading higher than our entry point, so we are profitable on an ER1 and ER3 at this moment. Our particular trailing stop starts out at the yellow dots, but ladies and gentlemen, you know I move my stops very quickly, and it is unlikely they are still at 965.40. That probably started to creep up a little bit. I'm not showing you that on these particular charts. You're only getting the basic major buy signals, the red and green bars. So we picked almost the low. We picked this high, this high, this high, this high. Those are four major ones. There were a few others. We got overbought, but we didn't have an engulfing, so we didn't have a signal. We picked the major low, February 27th, that I told you about at the time, the day it happened. and an intermediate type sell signal. It wasn't the highest high or super close. So I really can't count that as a particularly good signal, frankly. Small profit potential for a few days. Right now, bullish, looking for a rally in platinum, all the precious metals. Next is high-grade copper. No buy signal on the bottom, a couple of buy signals that didn't work very well. It didn't really work at all. And there were small losses. But we had a support level tested going back into previous levels and got oversold. Now we're overbought, looking for probably a minor downside correction. We are also in a resistance area in general, and intermediate to long-term, a little bearish. I need a little more evidence. Next chart is soybeans to start the grains, oil, meal, corn, wheat. Very overbought now for the second day, getting even more overbought. Frankly, the most overbought we have seen now in soybeans since apparently February of 22, 14 months. That's quite a long time. Notice that once we get above the red line, 75 on the RSI index, and I repeat, I learned RSI from Wells Wilder himself. I was lecturing on the International Lecture Circuit for about 30 years, all over the damn place, having a great time. And Wells Wilder and George Lane became personal friends of mine. They're both now gone, and sorry to hear that. So this is my custom version of RSI. It's overbought. We're about to top out. This looks like a blow-off top like crazy. In fact, it has some similar characteristics to the stock market indexes at the moment. Mentioning that, we're down now 85 hundredths on the spider, down just a little bit on the DIA, 8 ticks lower, and still slightly higher in the Qs. We'll see where they are when I finish up here in a few minutes. So I'm looking for this to turn back down again in soybeans. In fact, I'm basically bearish across the board in the grains. We see that this is overbought for a few days in a row now in the soybean oil, and again, an extremely overbought condition, highly likely to turn down any old time now. Next, soybean meal. Nice big rally, but the bear trend persists. A little bit of a double bottom. Maybe we'll work our way up a little bit more. We're not overbought. We're at 64. So there's elbow room for more of a rally, maybe to 418, maybe even a little bit more to 434-ish. But I think the trend has turned down. Next is corn. We broke the bear trend line here today. That's interesting. We do have some resistance areas that we're still up into at today's highs, and we're extremely close to overbought. I don't think this rally is going to carry too much further. I think it's likely to turn back down again, and we'll have to reestablish the major bear trend line. Maybe, okay, I'm going to draw it across this high now, and we'll see if it stays above the line by the end of the day. That's still pretty relevant. I mean, you got two lines that are almost parallel over in a very extended period of time since May of last year. Again, interestingly enough, around 14 months ago. Yeah. All right, next chart is wheat. Could rally slightly more, already in overbought conditions, likely to turn down pretty soon, but it might try to get up to 740 in the meantime, which would be a pretty good extension of this rally that has already started, of course, for a few weeks, a couple of weeks. So I'm bearish. I'm expecting it to turn down, and it could be at any time, but there could be a little more elbow room to the upside before it does turn down. Next chart is live cattle, then we got hogs. We have two fantastic sell signals in cattle. One is the top of the market, huge bearish engulfing. We had another one approximately a week later. Both of them are doing just fine. I don't have any trouble whatsoever with today's rally high coming back into, again, approximately the middle of the range of the bearish engulfing 2 days ago. So the next move down is going to make lower lows, lower than Thursday, and that'll be new lows for about 3 weeks. The first support level is down at 163. So there's some good elbow room on the downside. We're not overbought or oversold, very neutral at the moment. looking for a downside correction in a bull trend. Next, lean hogs, brand new today. Brand new. Sell signal happening now, today. We have an outside down day in overbought conditions and a bearish engulfing ER red sell signal, period. Will it work? You never know. You have to take your chances when you're trading. You have your odds, you have your history, you have your confidence or lack of it, you have experience or maybe not. I have been around the block so many times. I'm very confident that by far and away, most of these signals that you're looking at work to some degree or another. Occasionally, they are incredibly profound. We have a major top way back here, February of 22 for hogs. We get another fantastic sell signal, March 21, 22. We've got a great sell signal. Unfortunately, it's not the highest high, which I love, but it's very close to August 16th of 22. Some decent buy signals. That is in a bear trend, so you don't expect it to go very far. And it went a nice distance immediately. Not so good here, very minor, not so good. But this one is a little bit better. And remember, the trend didn't change. If you get buy signals in a bull trend, theoretically, you trust them a little bit more and vice versa. This is a bear trend. We're getting a sell signal. So again, theoretically, you should trust them a little bit more. Next chart, OJ. Not too much to say here. Sideways movement. Trend has slowed down a little bit to the upside, but the trend is still up. No comment to speak of at the moment. Cocoa, overbought, looking for sell signals, and that's the best I can say, except the downside correction, I expect, will get down to 3,038-ish, and maybe a little bit lower to 2,091-ish, 2,971, I meant. Next chart is cotton resistance level overhead. Didn't even get reached in the last couple of weeks. Very profound sales resistance level. Looks like, and this is kind of boring and slow, it's been going sideways for many months since October. We need to wait for a bullish or bearish breakout. I favor the downside, a bearish breakout, but we don't have any signals at the moment. And sugar to sweet, bull trend coming up to the previous tops, major resistance up here. Watching very carefully. If I get a sell signal, I'll scream bloody murder. I'd like that very much. Plus, look how close we are to being overbought again. And we're approaching previous highs. Prime territory for a double top. Next, we're back to the E-mini. Thank you very much. You guys have a great weekend. See you on Monday, which is a minor change in the trading time frame hours because of the holiday. Have a great weekend.